Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. Bitcoin has broken down from the short-term horizontal consolidation after rejecting from that 50-day long uptrend. The breakdown of this horizontal level increases the potential for not only a weekly close below the range high of the prior all-time high and the 62.09 on the weekly RSI, both of these being potential macro sell signals. The short-term price action and the higher time frame charts are now showing some major warning signs that we need to discuss and plan for going ahead. Before we get into the video today, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. That is the first link down below. You'll get access to charts, updates, videos, educational posts, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining the VIP channel, you can do so by clicking the pinned comment of the free channel to find out all our information, click the links, and take advantage of our end of month sale. So as we mentioned, guys, Bitcoin is showing a fair amount of weakness here on the short term, and the risk is that weakness will develop and then spread to these weekly charts, again resulting in the breakdown of the 62.09 and potentially the deviation setup being that of a weekly close underneath the weekly range high. Both of these potentially resulting and facilitating further higher time frame corrections. But that is not all we're going to be discussing today. We're also going to be discussing, of course, the total cryptocurrency market cap and total altcoin market cap, as these charts are moving towards pretty significant levels. But of course, also discussing exactly what needs to happen for the buyers to really step back in and avoid these potential breakdowns. So let's start on the market data. 24-hour volume is up 23% at 297 billion. Liquidations up 76% at 394 million. So a pretty big jump here in liquidations, with the majority of that coming from long positions. Around 66% of the total liquidations coming from longs, as Bitcoin does tumble toward the downside after rejecting from that 50-day long uptrend. Of course, we had the breakdown from the 50-day long uptrend. We had the retest of those equal lows over here, this change of character level, this equal lows. We bounced back up and completed a perfect support resistance flip from that downtrend. Again, then, should I say from the uptrend, resulting in then a rejection through that low. So we are very much in a confirmed downtrend over here, and we are undergoing what we're going to be assuming to be mean reversion, potentially to that 200 moving average. We'll come back and discuss that in a second. Moving over to the DXY, the DXY has rejected again from that range low. All in all, guys, we are still expecting macro corrections towards that 93 to 92 target. That is going to be 6 to 12 months in terms of our time frame. It may occur quicker, it may occur slower. It all does depend on how the Federal Reserve decides to move forward with interest rates. Of course, as per the meeting 2 days ago, they announced there is still a large amount of uncertainty as a consequence to the tariffs, and due to this, they are still they're still speculating on how they should, I guess, go forward with adjusting the interest rates in future periods. The overall narrative is that interest rates are going to be reduced at some point. The question isn't that. The question is when and how aggressively. So as long as there's uncertainty surrounding that, there is going to be a degree of uncertainty in the direction of the market. Moving over to the S&P 500. The S&P 500 saw a pretty good bounce yesterday. We were able to jump back above temporarily that change of character level, but unfortunately over the past 24 hours we have of course failed to sustain above the change of character level, being this level of resistance right over here. sitting around that $6,000 point. We can see above this that $6,000 resistance, we were expecting continuations into new all-time highs, and we still do expect that. But for us to trigger that move upwards, we need to sustain above this prior high. So until we get above this prior high, we are expecting, again, resistance is resistance until it is not, and the potential for corrections back into this high time frame support remains in play. If we drop below this high time frame support, that is when the S&P 500 becomes bearish for potential macro corrections, as this would be a macro lower high. We have a high over here, this would be a macro lower high. Now, if we're looking at the overall potential for upward movements, provided we do remain above this high time frame support, we could still see continuations upwards. So the key level we need to sustain is 5,700, and the key level we need to break is going to be that $6,000 level. So above 5,700, the expectations are upwards. If we break 6,000, we will see new all-time highs. And worst case scenario, if we drop below 5,700, we can see steeper, higher time frame corrections. And that is it, guys. Let's jump over to Bitcoin. As we've said, we have a heap to discuss, from the short-term charts to macro implications, potential warning signs which are now developing, and of course, the total cryptocurrency market cap. Before we get into all of that, make sure to go ahead and sign up to BitGet, BitUnix, and BingX with the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll go to support me making this content on a daily basis, and of course, you'll support yourself trading on exchanges I use and I trust. Go ahead and check it out. We'll play an ad and we'll jump right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump back into it. So starting on the short-term chart, let's discuss what is happening and what macro impact this may have on the weekly charts. We'll start on Bitcoin and we'll finish up on the total cryptocurrency market cap and the total altcoin market. So as you know, in yesterday's video, we discussed that Bitcoin broke down from the 50-day long diagonal uptrend. Now, this diagonal uptrend has been essentially the uptrend we have been in ever since we were able to break out of that multi-month downtrend, which started all the way back at the beginning of 2025 at 110,000 and ended, of course, at the beginning of April on that breakout at 82,000. Since that point, we have been traveling in a very steep uptrend. And as we mentioned a few videos ago, that the breakdown of this uptrend was inevitable. When we see these aggressive uptrends with these very steep trend angles, eventually these trends break, and we result in two potential scenarios. Scenario number one, upon the breakdown of the trend, we enter a horizontal consolidation in an attempt to absorb the selling pressure and reverse the trend back toward the upside. And number two, we see an inability to absorb that selling pressure, which results in mean reversion, generally towards the 50 and the 200 moving average. So we've seen the breakdown of this horizontal consolidation, which did develop as a consequence, of course, of the breakdown of the 50-day long uptrend, and we've actually seen the loss of the range low of this consolidation. So immediately looking at our short-term targets, we take a measured move of this channel, apply that to the breakdown point, and as you can see, perfectly as expected, the measured move target will take us exactly to the 200 moving average, which we discussed upon the breakdown point to be the target if we see mean reversion active, if we see the mean reversion, which is essentially what mean reversion is after we see large moves in one direction, we see a little bit of that upward move give back toward the downside and the price come back into a level of demand. So we've seen, again, a massive rally, we've seen the breakdown, we've seen now the loss of the horizontal consolidation, and that measured move target is projecting that we would see the correction down to the 200 moving average. Now this is where it gets very interesting, because the 200 moving average is sitting at a pretty important support, of course. As we can see, this is a pretty major level of liquidity. We have got a massive VRPV gap below the 102,000 level, so we know 102,000 is a major support. We can see also that 102,000 was a prior horizontal consolidation range. The range low of that prior consolidation was, of course, 102,000. But most importantly, when we look at that 102,000 range and go to the higher time frame chart, the 102,000 level is actually sitting underneath. And this is the most important thing. It is sitting underneath the range low of the prior high. This is going to be 104.5. Okay, so this is where it gets very interesting. If we see the breakdown target reached of this horizontal consolidation, that would mean the probability that Bitcoin closes a weekly candle, which is closing in 3 days' time, below the weekly range low high, which is currently a weekly support, okay, and the 62.09 in the RSI massively increases. Now, this probably doesn't mean much to you if you aren't aware of the impact this will have on the charts, which we'll discuss in a second, but this is very significant. If we're looking at this from a structural perspective, what we can see here is we have got, of course, the prior high. We're going to go ahead and delete all these levels. A prior high, so a previous resistance becomes a future support, okay? What we are seeing at the moment on the weekly is we are engulfing the prior weekly candle. So we have got a degree of weakness over here. The first time really we have seen a large amount of weekly weakness in this trend ever since we broke through the downtrend. Okay, this is the first red candle, and in fact it is a bearish engulfing candle. So it is representing a large amount of weakness developing at this level. But with this close, we would of course also print a weekly bearish divergence. So if we see the weekly candle close at least underneath the opening price of the prior candle, and at worst potentially at 102,000, we will see a bearish divergence print, we will see a bearish engulfing candle print, and we will potentially see the price drop to 102,000, which will confirm this breakout as deviation from the prior range high. All three of those things massively increase the potential for a steeper correction. So this video isn't here trying to tell you that we are going to go drop, it is all over, the bears are in control. What this is outlining to you at the moment is, yes, there is still a chance we continue upwards from here. We'll discuss it in a second. But if we see the expected target reached as a consequence to this breakdown, there are some high time frame domino effects that may have, and it is pointless to blind yourself to that. Everyone wants to see the price go up. I would love to see the price go up, but we need to be aware of what the probabilities are, and of course, the potential extended implications that breakdowns over here may have on the chart. So let's talk about that now. What would really happen to the price? Or what is the potential for the price to go lower if we start to see the price drop below 102, drop below the range high, and most importantly, drop below the 62.09 on the RSI? Let's take a look at the 62.09 on the RSI now, because this is a very, very important level. This is the price action for the 62.09 ever since 2018, okay? So we're looking at around 7 years, 7.5 years of price action over here. Over the past 7.5 years of price action, the 62.09 on the RSI has broken down around about, 4, 5, 6, 7, 9 times. Of the 9 times we have broken from the 62.09, meaning the RSI has been above it and has closed the weekly candle below the 62.09, we have only seen one instance where we have gone upwards after. So 8 of the 9 times we have seen a breakdown of the 62.09 on the weekly chart, we have seen the price actually correct on the weekly scale after the fact. Let's take a look at some of these corrections. If we look at the most recent one, we can see upon the breakdown, we then saw a weekly correction of 22%. In this instance, upon the weekly breakdown, we saw a correction of 14%. In this instance, upon the weekly breakdown, we saw 18%. In this instance, we saw a weekly correction of 10%. In this instance, we saw a correction, which was eventually going to be the bear market, of 73%. We saw, in this instance, 39%. This, of course, was the failure. This is the one of the 9 times we did not see a correction. In this instance, we saw a correction of 62%. In this one, we saw 73%, and you can see how this goes. We can see almost every single time except once, we have seen a steep correction of at least 10% and upwards. So yes, there is a risk that if Bitcoin drops below the weekly range high, that we see again the 62.09 close below, we will see the price action reach that 102 level, and as a consequence, we will have the bearish engulfing candle, we will have the bearish divergence, and we will have the deviation set up in play, which could result in, hypothetically, at least a 10% correction, which would take us back down to this weekly low. That is something we have to be aware of. Now, when we're contextualizing all of this to the high time frame chart, we have to ask ourselves, well, if we were to see this play out, how bad is that? Would that destroy the bull market? What will we be expecting for the macro uptrend? The answer to that is, well, the macro uptrend will still be in play. When we're looking at the macro uptrend, particularly the bull market for Bitcoin initiated upon the breakout of 32,000. So in this candle here, that is when the bull market officially started. Of course, we ended the macro downtrend on this candle upon the breakout of the macro downtrend, but we officially broke that bear market resistance at 32,000, entering a bull market. Since that point, we have sat above the Gaussian channel upper band and the 50 EMA the entire time. So even if we were to see a correction back down to 73,000, we would still be, or should I say 93,000, we would still be sitting above the Gaussian channel upper band and the 50 EMA. It is only if we drop below that level do we run the risk of steeper macro corrections towards the 200 moving average. So the macro uptrend will still be in play, even if we were to see the breakdown of the 62.09 and all those potential bearish developments develop on the weekly chart as a consequence to the short-term price continuing downwards. So that is worst case scenario. Let's talk now about best case scenario and what the buyers need to do to avoid all of this. Because at the moment, this is what is coming if the buyers do not step back in. If we look at the short term, we are in a bearish trend now. We have not only broken down from a horizontal consolidation, which is giving us a measured move target of 102,000, but we have done so creating higher lows, okay? Or should I say lower highs, okay? So with these lower highs, of course, we've got a structural level in a break. We've also got the overall trajectory of this trend. So this is what needs to happen for Bitcoin to absorb this selling and avoid this breakdown. We need to see Bitcoin break through the recent high point, which is 110.3. Simple as that. If Bitcoin is able to break through this region prior to closing a weekly candle below the 104.4 level, we will avoid, at least for another week, all of these potential warning signs from developing further, okay? And if we do that, well, then we are very likely going to be continuing this uptrend into, again, brand new all-time highs. So worst case scenario for Bitcoin, we break down, we see continuations to the 200, we lose the 200, we're at 102,000, and we see continuations into like 95K to fill that VRPV gap. That will facilitate, again, the 62.09 breakdown and potential targets from that. It will facilitate the deviation from the range high and the bearish divergence from playing out. We will then see corrections into these lows before we hopefully then see continuations. That is worst case scenario. Best case scenario, we are able to invalidate the breakdown in the short term, meaning the price is able to get back above this level, and we eventually break through the diagonal and the horizontal range. If we do that, we see continuations. So how could you position yourself and what biases should you have? The charts are overwhelmingly stacking on the short term toward the downside, okay? That doesn't mean we're going to immediately drop towards the bottom. It doesn't work like that, okay? But if we're looking at the probabilities, while we remain underneath this range high, the potential for those weekly charts to turn more bearish are there, and therefore we are not looking for more Bitcoin longs until we are able to either reach our levels of support or break through these levels of resistance, and then we will see continuations. Let's go ahead now and talk about the total cryptocurrency market cap. So there is a silver lining to all this, and there is kind of a good thing still. And the good thing is that the total cryptocurrency market cap is still sitting above its high time frame support. But I do want to note that if Bitcoin does drop to this 200 moving average, it will fail to sustain above. We will see the breakdown of this uptrend. And again, if we break this uptrend, it is very likely the altcoin market will break below its baseline and see a steep correction as well. So you can see how the market could enter that tumble phase where we just see corrections market wide for Bitcoin and altcoins if we do drop any lower than we are dropping here, okay? The market's actually quite delicate with where it is sitting. So provided we sustain above this diagonal uptrend, we're good. If we drop below the diagonal uptrend, we expect corrections again to 50 EMA to 200 moving average, probably around the $3 trillion mark. For us to see continuations to brand new all-time highs, there is one level we need to break through, and that is going to be 3.5 trillion. We break 3.5 trillion, we will see continuations into new all-time highs for the total cryptocurrency market cap, and thus we will see the altcoin market cap rally as well. For us to be bullish on altcoins again, as you know guys, we told you upon the breakout of 840 billion, we expected 15 to 30% rallies for altcoins. We broke out, we saw that perfectly. At this point here, we told you resistance, time to take profits. At the moment, what are we telling you right now? We're telling you between the baseline of the Ichimoku cloud and the 940 billion level, we are more neutral. We are waiting and seeing. We're playing cautiously, just scalp trading. If we break 940 billion, that is when we expect the next leg up for altcoins. And just as we saw this move up here, we will see a similar move toward the upside. We can see another 15 to 50% rallies for altcoins. You can capitalize that on the breakout. But if we see the breakdown, we will see at least 10 to 20% corrections for altcoins, moving to the 50, moving to the 200 moving average. So that's why this is a neutral range right over here. Thank you for tuning in, guys. Have a fantastic day. We'll catch you guys on Sunday, just before that weekly candle close. Hopefully the price action has recovered a little bit, which will decrease the potential for these weekly charts to turn bearish, but we need to be aware of this. I'll say it again. I'm not sitting here telling you what I want to see. I keep my personal biases out of my analysis, as I always do and always will. I'm not a bear, I'm not a bull, I trade the trend, I'm a scalp trader. I am, however, making sure everyone is fully aware of all of the potential scenarios and the impact these scenarios may have, so you can plan and prepare for them and then react no matter what occurs to position yourself in an optimal position for whatever occurs in the market, okay? So we have to be objective when we're looking at potential opportunities, so we don't blind ourselves to a whole variety of potential opportunities that we may miss if we do not pay attention. So always pay attention, remove your personal biases. They're just going to do nothing but blind you, and focus on what is really happening in the charts. Thank you for tuning in, guys. Catch you guys on Sunday. Have a great Saturday and Friday, and I'll see you then.